Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome, everyone, to the Bull versus Bear webinar with Trade Day on TGI Friday. Thank God it's Friday. God, what a week, eh? What a week. Thank God it's Friday, the 2nd of February, 2024. So here we go. It's Jobs Day, it's Employment Day. Now, before we get into the webinar, just a reminder, particularly if you are new with Trader. We've been running our sale this weekend. I'm sure you're aware of the sale. If you're not aware of the sale, we're on 50% off for all evaluations since yesterday of 50,000 and above. So 50, 100, 150 and 250 for the 50, 100, 150 and 250k evaluations, 50% off for the short term, so for the near future. Okay, that's what we're going to say, but I would get in and buy them now. But it is Friday, and if we have new users who have come on and joined us since we launched the sale, a reminder that we have 4 data points that you can't trade over. They are, 2 of them are actual data points. Actually, they're not data for all data points. 2 data points and 2 events. The 2 data points are monthly. They are the US employment report, which pretty much comes in on the first Friday of the month. That is today. Okay, it's not always the first Friday of the month, depending. Sometimes when the first Friday of the month is the first of the month, the first, if it was the first, then sometimes we don't get it on the first. But usually it's the first Friday of the month, and you cannot trade 2 minutes before or after the data. We have sent emails. There's a note in the forums. There's been heads up. You can get alerts are sent out into the Discord group. We have sent out, say, I've already said the forums. Oh, it's in the heads up, the scrolling heads up above where you are watching right now. If you're watching this live, okay, we do our best to alert you to all of this stuff, right, guys? But please do be aware. No trading or orders in the order books 2 minutes before or after the data, okay? The data comes out today. It's, well, I can tell you my time because it's always, I'm in the UK, it's 1:30 in the afternoon. But if you're in the US, it's 1 hour from now. So it's 8:30 if you're Eastern, it's 7:30 Central. I'm not doing all the time zones around the planet, okay? But 7:30 Central, 8:30 Eastern, and it's 1 hour from now, 1:30 if you're in the UK, 2:30 on Central European time. Okay, no trading for the 2 minutes before. So from, if you're in Central time, it comes out at 8:30. You cannot trade from 8:28 to 8:32. Okay, and the only other events we have, or the only other one actual data point, is the CPI data. Okay, usually comes out in a couple of weeks' time, the middle of the month. Okay, it's usually the second/third week of the month, usually somewhere between the 10th and the 15th of the month. The US CPI data, the same. And then also on the Fed minutes, and also on the Fed decision. We had the Fed decision on Wednesday, and you couldn't trade over that as well. We still get a handful of traders failing because of it. You will fail, okay? The system will fail you if you're trading 2 minutes before or afters, or if you have orders in the order book 2 minutes before or afters. Right, that's the rant over. I'm sure everyone who comes on this webinar knows that anyway, so I'm kind of wasting my breath and just torturing you guys who already know, right? So my apologies, but want to try and get the word out there. If you can, guys, can post in the Discord, if you can post in the forum, so then people have got we post it everywhere, but people still trip up, and it's just frustrating for us. We'd rather not fail them. I'm praying for the day that we see no one failed on a data release. Anyway, it is payroll day, it is employment day, arguably the most important data of the month in here for the global economy, and we've got the US employment report, so all eyes are going to be on that, and the market will likely take its lead from that. Remember, the market has been a little bit trading good data, bad for equities, right? We don't want the data too strong. If the data is really strong, 2 reasons: the Fed, maybe they're not so worried about inflation, so the Fed maybe won't cut, or it'll end up giving inflationary pressures, particularly if our average hourly earnings is strong. So we don't want the data too strong. Too strong could actually be, too strong's positive for the economy, but could be negative for stocks, because then the market will then turn around. Well, this is assuming you're trading the equity indices, which I know 90% of you are. So just watching out for that. So at the moment, it has been that if the data is too good, what we want is Goldilocks, not too hot, not too cold, just about right. That's the kind of data we want. If the data is particularly weak, it'll probably indicate that the Fed are more likely to cut rates, and the market will like that. So it's kind of sort of counterintuitive at the moment. So if the data is about in line, I think think is seen as a bullish. If the data is weak, it will probably be bullish. If the data is too strong, it might be bearish. So just watching out for that. Ultimately, my underlying view is still bullish, and I still think the market goes up, but it will be data dependent. So we've got that now coming up in 55 minutes. Now, don't forget as well, that will be the dominant piece of data, but sometimes gets overlooked in here. Michigan Consumer Sentiment Expectations is also out today. That's at 10 o'clock Eastern, okay? 1.5 hours later. If the market has kind of started to fizzle out, it might look for a leadership there. That is an important piece of data and can move markets. So watching out for that as well. Let's step back to the earnings calendar. Now, the earnings, we have had some oil companies, big oil, been reporting today. ExxonMobil and Chevron, you can see, beat expectations. Mostly Chevron did actually miss on its revenue by some way, actually. But the more important data we had yesterday, and flicking back on the earnings calendar, we had three of what we are calling now the Magnificent Seven. Apple, Amazon, and Meta all reported. We've had another two of those already earlier this week of the Magnificent Seven. We had Microsoft and who else did we have? Microsoft and Alphabet, Google, early this week on Tuesday. But these in here all did pretty well. Okay, the numbers all, as you can see in green, the market took it very well, particularly Amazon and the metadata, and we saw those stocks leap higher. And with those stocks leaping higher, it took the broader market with it in after hours, late hours trading in here. So we saw a leap higher, and those stock indices have maintained those strong rebounds in here. So setting up fairly bullish as we go into that employment report that we have now in 53 minutes time. So all focus on that. Let's just run through some of the reports in here. 5 things you need to start your day. So jobs day, we've already kind of covered that in here. Taking a look at that as we go in today. Meta and Amazon, we've already spoken about that, surging higher on positive numbers in here. Meta 17% up in pre-market trading, and Amazon also doing well, 6% up as well. Apple, though, shares fell after highlighting troubles with deepening stuff in its China operation and sales. There is this kind of going a little bit under the radar. We've had a lot of stuff going on this weekend, and so we had 4 of those Magnificent Seven reporting. We had the Fed on Wednesday. We had the US, and we had the US employment report today. Regional banks, just as we saw now, I'm pretty sure it was 2 years ago, we had the big wobble in the regional banks and some of the regional banks going under in the US. There's another wobble in here. Concerns about the health of US risk continue to be a leading theme in the markets this week. So it's a little bit under the radar because we've had all this other stuff going on. It's not fully under the radar because it's still we're still being covered, but it's not really having a bigger impact on the broader market. But this is something we should definitely monitor in case we do get this some kind of contagion effect that could see it spread into wider, not only regional banks, but into the larger national banks and the investment banks. So watching out for that, and maybe even it going international. So do keep an eye on that. And what's coming up today, we've already covered it in here. We've got the payroll report is the main focus in here going into the day, and these companies have already reported. Let's just run through the headlines, but I've covered pretty much all of it in here. US futures get Amazon Meta boost before jobs data. Tech giants surge after quarterlies beat expectations. Another one on Meta, Amazon surged by 279 billion after cuts boost profits. World markets cheer bumper tech earnings as US jobs report looms even from Reuters. US jobs report to show slower hiring pace after annual revisions. So adjustments could affect the Fed outlook. So we're watching that. So watching the data today, it's going to be very much watching that data. And again, it could be that good data equals a negative for the stocks, and negative data could be good for stocks. Modest slowdown in US jobs is expected, so that's already in the market. So just look at what the data is that we're expecting in here today. On the NFP number in here, well, on the unemployment rate, we're looking at 3.8%. On the non-farm payroll number, the headline number, we're looking at 187, coming in at 187. So somewhere between 180 and say 200 would be okay and probably be positive for the market. Above 200, I think would actually be negative. Counterintuitively, sub 180 would probably be seen as a positive for the market. What else do I have in here for you? US, so here's the stories on the banks. US regional regional bank stocks brace for final trading of a painful week. And again, US regional bank set off a cautionary sign of more pain to come. A quick nod to the Fed Watch tool in here. Looking at March now, we've got now a 65% chance now that we leave rates unchanged. So this is come back a little bit lower, but now we're really not looking for that rate cut to come until now May, but then looking for a rate cut from May onwards. The market pricing in until the end of the year. And then a quick nod to the overnights. Little change in Asia overnight. The Japanese Nikkei up 4/10. The Hang Seng down 2/10. In the European markets, the FTSE, the DAX, and the CAC are all up today. The UK, German, and French markets up 3/10, 8/10, and 6/10 respectively. And looking on the overnights in here on the US, having had a solid day yesterday, a rebound day. Remember, we sold off on Wednesday after the Fed, but we were already selling off on Wednesday. Most of the sell-off on Wednesday came because of the poor data that we saw from Alphabet / Google and Microsoft, that we saw on Tuesday. Then that gave us a hangover even pre-Fed on Wednesday, and then Wednesday we went lower after the Fed. Then we got a rebound yesterday anyway, so we'd already seen a rebound yesterday happening. S&P was up 1.25%. I think the Nasdaq tagged on over 1.5%, and even higher this morning in here on the overnights last night. Well, the actually rally was last night with expectations of the cash market opening higher. Stock futures are up 1% on the Nasdaq and 6/10. So if you think we're up like nearly 2% in here, what with yesterday's rally and the additional rally that we've got on the overnight in here. And if we look at the charts in here, these charts were done before, so already you can see in here we were rebounding solidly yesterday. This is even before we got the data from the big tech in here. So the market significantly higher on the S&P and the Nasdaq starting to rebound as well, and obviously significantly higher if we switch to. Before we go to that, on the bond markets continue to surge higher as well in here, both pre and but mostly post Fed in here. Significant prices higher prices. Remember, equals lower yields. Lower yields good for growth stocks, particularly the Nasdaq as an index in here. So here's the tail of the tape on the overnights in here. So surging higher. So yesterday's price action picked up post. This is obviously post the data as well, the earnings data in here. And then we had a little bit of a dip and a rebound, but high level consolidation. You saw when we went down, we flirted with that 13-period EMA and back higher. And we said yesterday we were looking for taking out, remember these resistances here, looking for it to get back towards this 50%, which it did got close to that pre the numbers, and after numbers, boom, up to and through. All risk today, data dependent, is to go back up to the highs up here in the 17,700, maybe as high as 17,800 going into today. On the S&P, similar story in here, but even better, rejecting the sell-off that we saw both pre and post Fed on Wednesday, making new highs yesterday and yet new highs. Remember, these are all-time highs, so looking bullish in here. I still, you can't argue with that rejection of this sell-off in here, and this looks like it's going to take off again. So still pointing high, still looking bullish as we go into today, but obviously data dependent. I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you on Monday. Have a great weekend too. I'll be back with you on Monday for another Bull versus Bear webinar. And get those helmets and goggles ready for the US employment report now in just what have we got now? We've got 17:47 minutes. All right, guys, have a good one. Take care.